Welcome back. This is Lab 1.5, Business 253, and this is question number 3 in Lab 1.5. And we're recording the transactions that are listed in the table below into the accounting equation shown here. So the first transaction, the business issued shares to shareholders for $20,000. That means that cash has an asset. You need to fill in the asset here. So cash goes up by 20,000, and so we enter that, and the share capital went up by 20,000. Now we've got some information here. Both of those are increased by 20,000, and it says that if equity is affected, and it is because we've got share capital here, we need to put in an explanation. So we go to equity, and there we go, investment, and that takes care of the first transaction. Then it says we purchase 700 of supplies on credit, so that means that we have a new asset of inventory. So assets, I guess supplies, it says supplies, right? So we have supplies, new supplies of 700. So that's an increase. We're supposed to put in increases with positive numbers and decreases with negative numbers. And it says we purchased on credit, so that means our liability went up by 700 as well. So now we have a balance of 20,000 in cash, 700 in supplies, 700 in, we need to put in the liability here. This would be, I guess, accounts payable. I guess we need to come up with a total here first. Okay, there's the total. And we need to put in the kind of liability we have here. So liability would presumably be accounts payable. So when it says on credit, purchased on credit means accounts receivable. Paid, purchased on credit means accounts payable. Sold on credit means that it's accounts receivable. And the retained earnings has a balance of 0. Okay. Now, then it says Bentley collected $6,500 for commissions earned today, so that means our cash is going to go up by $6,500. And no effect on supplies or accounts payable. It does affect retained earnings though by $6,500.